A lot of women ask me how I got started in investing. I actually started when I was only 20, but I made a lot of mistakes and I had a lot to learn. In the video today, I'm going to explain to you what I would have done differently if I was starting to invest today. And if you're much older than 20 and you're only just starting to invest now, don't worry, this video is still really relevant for you. So when I got started investing, I was actually at university, and unfortunately there were no courses at my school that could explain to you how to invest. So I'd read a few books, but then a lot of the other books that I tried to find about investing on the stock market seemed to be really technical. And so I luckily discovered that my local stock exchange was holding courses in the evening that were free. And so I started going along in the evenings to my local stock exchange so I could learn about stock market investing. The first night that I turned up there, I was the only woman. And I was the only one under about the age of 60. Most of the people in the audience were all these like really old men in retirement. And then at the front of the room, the people talking to us were these really young guys who only looked like a couple of years older than I was. And they were showing all these really complicated charts and graphs and speaking in all this jargon. And I just didn't understand a word. I don't think I learned a thing from that course. But then one day, a woman walked in the room, an older woman. And she was actually a stockbroker. And in the end, she became my stockbroker, and she kind of took me under her wing and taught me how to get started in investing in the stock market. So women often ask me how I managed to get started in investing at such a young age. How did I get the money for it? They sometimes ask, did I inherit the money? Well, the answer to that is no, I didn't inherit anything. It was all from my own savings. When I was 17, I read a book called Women and Money, and that book taught me how to do a budget. And so as soon as I started to get my little bit of money, which was $70 a week as a student, I put aside 20 of it because the book explained that if you put aside $20 a week, by the end of the year, you'll have $1,000 or just over $1,000 saved. And at the time, I remember thinking, oh my God, like $1,000, that would be so amazing to have that sort of money in my account. I would just feel so rich if I had $1,000. And so that's how I got started saving regularly. It took me 3 years to build up both my savings and also my confidence and my knowledge to start investing. Women often ask me as well what mistakes I made as an investor. One of the first stocks I ever bought was a company called Boral. And I used to call this company Boring Boral. It was a building materials maker, and it never really crashed, but it didn't go up very much either. It was quite flat. It just kind of plateaued. And this was a recommendation from my stockbroker. And I think she thought that if my first stock was something really volatile and if I lost money on it, I'd be put off investing altogether. So she suggested something that she thought was really safe to kind of, keep me in there. Actually, I think that stock wasn't appropriate for my risk appetite because I wanted something really exciting and, that was just going to skyrocket. And I know myself well enough now that I wouldn't have panicked, if it had gone down because I was expecting that from all the research I'd done. But that was a really important lesson that I learned, was that I don't like boring stocks. The second investment I ever made was actually a fund. And it was because I was reading the paper and there was an ad in there from this funds company. And the ad went something like this. If you've got a grandson who's 21 and you want to put aside some money for him, you should buy him a fund because if he's 21 now, by the time he's, retirement age or something, he'll be a millionaire. And I thought, well, I'm 21 and I don't have any rich grandparents, so why don't I just do this for myself? And so that's how I got started in investing in funds instead of direct stocks. And actually, that turned out to be a really good decision. So the fund that I bought was actually a fund that was invested in a couple of things, not just stocks. It had a bit of stock market investments in there, but also some other things like bonds, maybe a bit of property, cash, all of that. So it was quite diversified. And although I invested a fairly small amount of money, I think I invested $1,000 for my first investment there, the same as I'd invested in Boring Boral. It was actually a less risky investment than investing in one stock because it was so diversified, not just in terms of having exposure to a number of stocks, but also other asset classes as well. So over the next 5 years, I started investing and building up my stock market portfolio, so my direct stock investments. And at the same time, I was also building up the number of funds that I invested in. And so by the end of it, about 5 years, I think I had maybe a handful, maybe 10 different stocks, as well as a handful of funds. And so at that point, I did a kind of analysis where I compared the performance and also, just how it was going with both of those investments. And what I discovered was two main things. One was that investing in stocks is hard work. It's quite boring, actually, reading all the company statements and reading the balance sheet and the profit and loss and trying to figure out, which were the good companies. It took up quite a lot of my time, and I didn't really feel like I had a natural affinity for that stock analysis. In contrast, buying funds was really easy. A lot of them gave me instant diversification, which I was really happy with. And when I compared the performance after 5 years, even though my funds had actually had higher fees associated with them than buying directly stocks, my performance was better. They were more diversified, and yet the performance was better. So I was much happier investing in funds, and I felt I was better at it than investing in stocks. So if I was starting today to invest, what would I do differently and what would I keep the same? Well, number one, I would definitely start with a good budget and a good savings plan. When I started saving, I made sure that the money I wanted to save came directly out of my account as soon as my pay came in. So I was never tempted to spend it, and I just lived on the rest. And I really believe that having a good budget and a good savings habit is like the foundation. If you don't have that and you're not able to live within your means, it's kind of like you're trying to build a house on sand. You haven't got a strong enough foundation. And often, if you don't have that strong habit set up early, it can end up really costing you a lot. And that's when investors often get into a problem, because then they start investing money that they can't afford to lose. The second thing that I think went quite well is that I started investing quite small amounts. I was just taking baby steps. Usually I invested, say, $1,000 with each new investment. And then if it went up and it grew in value, I just let it ride. And I think that's a really good strategy for somebody who's a beginner. And in fact, in Europe, if you want to start investing, often you can start with investing, say, just 50 euros a month. And then that is put in every month regularly. It just grows by itself, and you don't have to worry about trying to time the market and figure out whether now is a good time to invest. So if I was starting it again today, that's something I would definitely continue. I would invest small amounts regularly and not try to figure out, okay, is now a good time. The third thing that I would definitely do if I was starting today is that I would just focus on funds and I wouldn't bother about stocks. Now, it's true that some people have a real passion for analyzing, investing directly in the stocks. And if that's you, well, then that's fine, go for it. But for the average person who's already really busy with their job, maybe you've got family commitments as well, then I don't think it's worth it, because often you can get just as good investment performance and it's just a lot less work. It's easier, you're more diversified. There's multiple benefits. Also today with ETFs, it's even cheaper to get invested in the stock market. So that's really the fourth point that I think is important to do if I was starting today, is that I would buy tracker funds or ETFs. In my day, they were still pretty young and there weren't many options available for that type of fund. But these days, there's tons of them. And actually, one of the difficulties today is more trying to figure out, okay, which ETF do I buy? If I was an investor starting today, I would buy something in Europe. If I was based in Europe, I would buy something like the Euro Stoxx 600, which gives you exposure to the 600 largest European companies all across the different countries in Europe. So that's like Scandinavia, England, France, Italy, Germany, all of those countries and the biggest companies within those countries. So if I woke up tomorrow and I had no investments, they'd all gone, that's how I would get started again. I would do those three main things. I would open an investment account, just set up automatic debit, so it was going in regularly every month, and then buy a couple of different broad ETFs, index or tracker funds. And then I would spend my time living my life and not spend so much time trying to figure out how to pick good stocks.